Hello, people. If you can hear me, give me a hi. Give me a hi if you can hear me. Give me a hi if you can hear me. Give me a hi. Okay, I'm waiting for another hi. Hello. Okay, so I have two people. Let's wait for one one more person. Joe. Joe. Okay, someone has joined. Introduce yourself. Is that Joe? Whoever just joined us, please introduce yourself so I know who we have here. Say hi. Just type in hi. Yep, no, there's three people I can see. One is four, actually. So there's two more people joining in the last 2 minutes. I want them to say hi. Just type in hi so I know who's watching. We have 9 minutes and then we start. Today is going to be very interesting. whilst we're waiting, we have 5 minutes and then we stop. I can see 3 people, but I don't know who this third person is. So Okay, we I want to start, but I want to know who I have here. So please, I know two. I've got two people saying hi. I want the other two to say hi, so I know who we have here. Then we start. If I don't get that, then we start exactly halfway. As I said, today is going to be very exciting because the lessons are, we are almost heading towards going to the platform, onto the platform, which is where all the fun is. So please, can I know who I have here? And this is the song I listen to when I'm studying. That's why I play it all the time when we are about to start. 2 minutes. Okay, so it is 8:30 and we are going to start. Okay, welcome to today's lessons. Before we start, as usual, let's go back to the homework I gave you last week. Ben, tell me about the homework I gave you. I don't know if Joe is here. If Joe is here, then you can tell me as well. So if you can tell me the homework. Quickly, let's use just this first 2 minutes because the homework is very important. If you don't do your homework, you wouldn't remember what we've done. So please tell me. I'll try and sort something out so that next time I'll allow people to talk instead of typing. So instead of writing the homework, you rather tell me. That'll be I'll try and sort something out for that later. So quickly, Ben, tell me the homework and we move on. Yeah, the major banks for all the seven countries that we have, um, that we use to pay to get the 27 other currency pairs. Yeah, the central banks of the major currencies. So, what is the central bank for the United States? What are they called? They have a specific name. Good. The Fed. Well done. What about the central bank for Australia? Central bank for Australia. The Reserve Bank of Australia. That's good. I can see you've done your homework. That's good. I don't know if Joe is here, so if Joe is here, he'll give his he'll give his answers when I ask him. But yeah, well done. Let's carry on. Let's carry on from let's carry on from where we left last week. So far we know what forex is. We know who trades forex. We know what category we we the traders. We know what category we find ourselves in, and also we know the currency pairs that we have that we're gonna trade. There's more. There's more of them. We have like hundreds of them, but we focus on the ones that I showed you guys because those pairs are considered to have politically and economically stable countries. So those countries that we looked at, the seven, those are the most politically and economically stable countries. That's why we focus on those ones. obviously there's more currencies like I shared earlier. Every country has got their currency, and if you pair them with the dollar, you or with any other country currency, you get a currency pair. So you can pair um, the Ghanaian cedis with the dollar, or you can pair the Ghanaian cedis with the Chinese yuan, or the Ghanaian cedis with the Japanese yen. But no one trades it. No one trades those currencies because one, you can't get a lot of investors investing in those currencies, and at the same time it's not liquid. Even though exchanges happen, it's not liquid. And when I say liquid, I mean there's not a lot of like people trading it basically. So if it's traded at all, it will be between the Ghanaian economy and the Japanese economy, simply trading for probably services or trading for business. That's about it. But for making money as we do in forex, no one trades it. That's why we focus on the currencies that I've given you guys, the 7 countries, and you pair them, you make the 27 or 28 pairs. So I hope by now, those who have watched the video 1, the video 2, you are familiar with those currencies, because I gave it as a homework last week. Last 2 weeks I gave it as a homework. Last week we went through it again, so by now everybody should be fine with that. So this week what we are going to go through is we're going to go through a concept called the forex sessions. What I mean by forex sessions, remember in video 1 I said that the forex trading is traded 24 hours. Now those 24 hours is broken down into sections. That's why it's 24 hours. So when one session closes, another one opens. So for that reason, you have a 24 hours, which technically is not 24 hours, but because it's all linked together, that's why it's 24 hours. So you say 24 hours trading, but broken down into 4 sections. So we have the London sessions, we have the New York session, we have the Sydney session, and then we have the Tokyo session. Now each of them has got their time, when they start and when they close. As we're going through, please, if you have any question, if you don't understand anything, please tell me before I go all the way to the end, because I don't want to get to the end and you ask the question. So if you know you don't understand anything, draw my attention to it now whilst I'm going through it now, and then once I finish, we can then go through it all over again. Not going through everything, but to go through the main points. So we're gonna go through the sessions and you understand why they are broken into sessions. I'll start with the arrangement I have put there is based on something called liquidity. That's why I arranged it this way, but in reality the sections is supposed to be Sydney section first, then you have the Tokyo session, then you have the London session, and then you have the New York session. Okay, so in reality, or in the normal 24 hours, you have first section is the Sydney section. So the Sydney section, I'm going to say the time in GMT. So it'll be it'll be a London time. So whatever time it corresponds to your country, then you can just use. You can go to Google and check what time it corresponds to your time. But the Sydney section, it starts from every evening from 10 p.m. till 7 a.m. Okay, so every evening around 10 p.m. from 10 p.m. to 7 a.m. the next morning, that's when the Sydney section is taking on. And the Sydney section is Sydney is open for business. So Australia, that's the capital. Sydney is the capital of Australia, by the way. That's when they are open for business. That's when the banks are open for business. So that's when the Sydney section starts. Mostly, and we're gonna go through that as well. Mostly during this time, from that 10 to 7 a.m., not a lot is happening. And I will go through that again later. When I go through London, not a lot is happening. Yes, I'm talking about UK time. So it's 10 GMT till 7 a.m. GMT. That's when the Sydney session starts, 10, and then 7 a.m. they close. It's like that's their daytime, if it makes sense, because they are well ahead of us in time. So Sydney starts first, and then we go to Tokyo. Tokyo is an hour later when Sydney starts. So Tokyo starts at 11 p.m. GMT, and they finish at 8 a.m. GMT. So we have the Sydney and the Tokyo session, just 1 hour difference. So both sessions are open, but it's just 1 hour difference. So Sydney opens at 10, and then Tokyo opens at 11. If you don't understand what I mean by section, please let me know. So I can explain it. Okay, so again, let me start. The Forex currency trading is traded in sections, okay, and it's traded from Sydney to New York, but it starts from Sydney, which is from 10 p.m. GMT to 7 a.m. GMT, UK time. And then the Tokyo session starts from 11 p.m. GMT to 8 a.m. GMT. Yeah. And then we have the London session, which starts from 7 a.m. GMT to 4 p.m. GMT. So you can see as Sydney is closing, 7 a.m., London is opening. So there is not really a gap. If there is a gap, it will be a second, just a second, because as this one is closing, another section is opening. So there's not really, you can't see the gap because one is closed, one is open. Welcome, Joe. So as soon as Sydney closed, London is open. But before London will be open, Tokyo session is is running at the same time. You can see it's 8 a.m. So there's not really a close because Sydney closes, Tokyo session is running. By the time Tokyo closes, London is running already. Yeah, so it doesn't close. That's why I kept saying that Forex is good because it's traded 24 hours. You can trade it 24 hours. But with other things that we trade, which is the stocks and commodities, and now the cryptocurrencies, they have a start and a closing time for every day. I don't do them. I don't trade stocks. I might trade something called spread. I spread bet on them sometimes. That's more advanced. It'll confuse you now. I spread bet on them sometimes, but not all the time. Okay. So yeah, by the time Tokyo closes, London is running already, and the New York session, New York starts at 12 p.m. GMT and close at 9 GMT. Yeah. So the main arrangement is supposed to be this: Sydney first, then Tokyo, then London. So this is what it's supposed to be. It's Sydney first, then Tokyo, then London, then New York. Yeah. So if anybody asks you about, well, if you tell your friends or you know about Forex and they ask you, okay, so when does, what session do you trade? Mostly, most currency traders trade between the London session and the New York session. And the reason why is because when London is open, because London is the capital, is the financial capital of the world. If you do your research online, London is the capital, or the financial capital of the world. That's where most businesses have their offices, and that's where most banks have their offices, and a lot happens during London trading session. So basically, most traders do trade during the London session because the London session and the New York session overlaps. And what I mean by overlaps is whilst London is open, when it's 12 o'clock, New York opens as well. So you have two sections, which if you read about Forex, that's where most traders do their trading, simply because again London is considered as the financial capital of the world, and New York being New York, um, a lot of these banks, big banks, like all the financial institutions in the world, have banks in America. So New York section is quite heavy as well. Not as heavy as London, but that's the second biggest trading section. So because those two overlaps, the London and the New York, because they overlaps, there's a lot of liquidity, or there's a lot of activities that goes on during those sessions. So I'm gonna show you guys on the platform. I'm gonna show you guys on the platform what I mean by section. So if you guys look down here, okay, if you guys look down here, you can see the time. You can see the date and the time. Yeah, you can see the date and the time. Okay, let me go back a little bit. So whenever London opens, oh, let me start from Sydney. When Sydney opens, it's always open from, like we said, 10. So from 10 p.m., which is, let me see. Here, from 10 p.m., just look at the bottom of the arrow. From 10 p.m., you see that there's not a lot going on in terms of trading. Yeah, and that is why a lot of people don't trade during this time, because there's not a lot of things going on. So this can be considered as the Sydney section. So it starts from 9, sorry, it starts from 10. It starts from 10 all the way to 7. So there. Yeah, so it's not a lot happening there. At the same time, Tokyo session begins. So when Tokyo starts, it'll be overlapping the Sydney section as well. So both Sydney and Tokyo will be trading at this time. And as you can see, not a lot happens. I can go through the chart and we can see a lot of examples from 10 to 7. There's not a lot happening. So anytime from 10, a lot of people are done trading. So before 10, majority by 5 o'clock, because London finishes at 4. By 5 o'clock, a lot of traders are done, simply because that's when most of the most of the trading happens. So from 7, let's see, from 7. So this is 7, 8, 9, and then you see all this trading going on all the way to 4, 5. When it's 4, 5, then it dies out, because most of the trading happens during the London and the New York time. Sorry. Most of the trading happens during the London. Sorry guys, I need to drink water. Yeah, sorry. Most of the trades happen during the London and the New York time. So by 7, London is open. And then 8, 9, offices are open in London. So mostly the time that the trade starts moving, or when it actually start moving, most of the time is from 9 o'clock. That's when you see most of the trading happening, because that's when the London office is open. So from 9 o'clock you can see there's moves. From 9 o'clock you can see there's moves. From 9 o'clock you can see there's moves. Yeah. So those are the trading sections. So you have the Sydney and the Tokyo from 10. Nothing happens. And then you have the London, New York, a lot happening. So when we go into learning our charts and learning our trading, I will repeat several times that when is it convenient to take trades, you guys should learn from now that trades should be taken during London and New York section. So you don't trade after 5 o'clock, and then you don't trade before 7 o'clock. So your trading will be capped in between from 7 to 5 GMT, that's London time or UK time. Okay, so put that, if you are writing notes or mental notes, keep that in your mind, that's when most of our trades will be taken. We'll be taking trades between 7 and 5. Any trade taken after 7, before 7 and after 5 is completely going against what I said when we did the second lessons, something about the majority failing and the few people making it. The reason why majority fail is because they don't follow rules. Yeah, and this is one of the rules. You have to trade between 7 and 5. Any trade outside these hours is completely, yes, 7 a.m. to 5 p.m. Any trades outside these hours is just going against your rules. Okay, so keep that in mind, or write that somewhere that you can remember. And when we get to, actually planning your trades, you are going to write those down on your trading plan. So when it's time for you to take a trade and it's not 7, you can't take the trade. If it's after 5, you can't take the trade. Yeah. Okay, let's go back to the slides. So any questions about the sessions, please ask, or forever hold your peace. Okay, I've already covered some details about this trading session. Best time to trade, when not to trade. I've just covered that. The best time to trade, usually, if you have time, is from 9. Okay, because 7, like I showed you on the chart, the session has just begun. That's when they are planning on what to do. And when I say they, I mean those who move the market. Yeah, remember when in video 2, when we talked about hedge funds and the small banks, those are the people that move the market because they have a lot of money. So when they buy or when they sell, that's when the market moves. So when they are open for business, we are open for business. When they are off for business, we are off for business. So the best time to trade is to trade when banks are trading, and that's usually from 9 to 4 or 5. So 7, yes, there are some moves, but majority of the moves start from 8, 9, like I showed you on the chart. From 9, sometimes 7, you can see the moves happening because Europe, Frankfurt. We have a European session as well, but that's not really considered because of London. We don't consider the European session. We incorporate that with the London session. But you have Frankfurt, which is the capital. It's not the capital of Germany, but it's a city in Germany. They have a trading section, and it starts from 7 as well. They have some moves, and sometimes from 7 you can see the forex market moving a little bit, but not much. Certain currencies will move from 7, but mostly they start moving from 9. Majority of them. Okay. One thing that I didn't mention is during the Sydney and Tokyo session, you guys know that when I gave you the currency pairs, we had some Asian currencies with them. So like the Japanese yen, the New Zealand, and the Australian dollar. Those are considered to be the Asian session pairs. So mostly these 3 pairs will move during the Asian section, simply because when Australia is trading, which is Sydney session, their currency is trading as well, so it will move the currency. The Japanese yen is part of the Tokyo section, so that one to move. And the New Zealand is more or less the twin brother of the Australian dollar. So when the Australian dollar is moving, the New Zealand will be moving as well. So let's go on to the chart and see that sometimes from that 10 o'clock that I said, those 3 pairs, which is the Japanese yen, the Australian dollar, and then the New Zealand dollar, sometimes they will move. So let's find the Australian dollar first. Okay, this is the Australian dollar, by the way. What's that? Okay. So let's look at the time from 10. Can you guys see the difference from 10 that this currency is moving between 10 and 7? This currency is moving like crazy. So from 10, this pair is moving, and it does move during London as well. So this pair is like, it trades constantly, simply because during Asian session is trading. The Asian session is the Sydney and the Tokyo. Those two are called the Asian sessions. So during those 2 sections, this pair is trading. So it doesn't stop. When it stops, then there's nothing going on. There's no news, there's nothing going on, so no one is interested. But most of the time, it is trading 24/7. So from 10 o'clock, you can start seeing that there are some moves compared to the British pound, which doesn't move at all. Okay. When we get into the trading, we're gonna learn something. What the banks do when trading is closed between 10 and 7. Even though the trading session is closed, or the banks are closed for business, they actually preparing for the next day. So on the chart, it will show that nothing is moving, but behind those, they are preparing for the next day movement. So we will learn what they actually do when between the 10 and 7. Sometimes you can see them, it is predictable. Sometimes, not all the time, but sometimes it is predictable. You can see a pattern that happens. So when it hits 10 o'clock, you can see that. Let's go back to the British pound. When it hits 10 o'clock, you can see that it doesn't move at all. It stays in like a small box. When it's 10 o'clock, it stays in a small box. When that happens, they are preparing for the next day. So you can then, if you learn it more, you can know that when this happens, the next day there's going to be a move. So you prepare in advance. Okay, but we'll go through that later. So the Asian pairs does move during the Asian session. So not all of them goes quiet, but the Asian pairs, again, I'll go through the Asian pairs again. Those are the New Zealand dollar, the Japanese yen, and the Australian dollar. From the 7 I gave you guys, these 3 moves during the Asian session. The others don't. The others just go quiet. So let's see another pair. Let's see another pair. So let's see the euro. Okay, this is the euro. Okay, and similar to the British pound, when it's 10 o'clock, it just go dead. When it's 10 o'clock, it just go dead because nothing is happening much. No one is interested. And then from 7, 8, you see it start moving to 5, 6, and then it goes quiet, and then 10, no one is interested. And then it starts again, and it goes quiet, and it starts again, and then it goes quiet. Sometimes it will move if there's any news over the night. So if some bank manager or some important figure is speaking, then it will move during that time. Okay, but other than that, it goes quiet from 10 o'clock. Yeah, so keep that in your notes if you are taking notes. Yeah, and I would recommend you take notes. Let's go back to the slides. So the best time to trade, in my opinion, will be always trade during the London and New York session, because that's when majority of the moves will happen. Yeah, best time to trade is from 7 p.m. 7 a.m. to 5 p.m. Between those time window, that's when you can do most of your trading. Outside those is too risky. You don't trade. When not to trade? Yeah, when not to trade is before 10, trade. After 10, don't trade. After 7, trade. Before 7, don't trade. So let me put that here for you guys again. So trade between 7 a.m. and 5 p.m. GMT. Very important. Very, very important, because most traders that lose money is simply because they see the market moving after 5 and then they want to join the move. When you join such moves, bear in mind that most of the banks have closed. So whatever that is happening, which we will learn later. We call something manipulation. So the broker, which is the company that you will sign up with to trade with, um, probably is doing some adjustment. That's why you see those moves happening. So it's not a real move. Probably they're trying to systemize something, or they're trying to do something to the currency pair. So if you do join, then you are in the wrong territory. Yeah. So take the advice, trade between 7 a.m. and 5 p.m. So any questions so far before I go to the next slide? Please ask or forever hold your peace. So I'll take that everybody understands what I've just shared, so I can move on. Cool. Right. So we're going to go through some forex terminologies. So when I say terminologies, they are like some words that we use during trading, and as a forex trader you need to know them. So when I say pips, I expect you to know what that is. When I say lots, I expect you to know what that is. When I say trend, I expect you to know. It's like a language. When I say come, go, you know what I'm saying. So forex language, there's more, but these are the basic that you need to know for now. As time goes on, you will learn most of them. Yeah, but these are very essential. You need to know them now before we go onto the chart. So we start with pips. Now, when we come to the world of forex, we always talk in pips. And what I mean by pips is the minimum increment of a price move. So a minimum move of a price move from 1 to 2 is a pip. I'll give you an example. Let's do it this way. So let's say we are trading the Euro USD, okay? And by now, I expect everybody to know what Euro USD is. If you don't know what Euro USD is, then you are banned. Yeah, you are banned. So let's take an example, Euro USD, okay? And the price of Euro USD is 1.1234, okay? This is the current price. If price move from 1.1234 to 1.1235, yeah, then we will say the pair or Euro USD has moved 1 pip. Does that make sense? So the pip is this minimum or the smallest increment in price change. If price moves from 1234 to 123, 7. Then I would say the Euro USD has moved 3 pips. Yeah. So if price moved from 1.1234 to 1.1240, then I'll say price has moved 6 pips. The same thing down. So if price moved from 1234 to 1233, then I'll say price have moved 1 pip. Whether up or down is moved the same amount of pips. You don't have -1 pip. No, it's the same. So depending on your position, if you are buying, then it's moved down. So if it goes down and you're buying, then you are in a minus. That's when you can say I'm in a minus 10 pips or -5 pips. But that's when you're trading. But if you're not trading, then it's neutral. It's moved a pip, whether up or down. But let's say you've bought it. You've bought Euro USD. And if you don't understand what I mean by bought, then watch the video too, because we went through that in a lot of details. We spent most of the time explaining the buying and selling of the same currency pair. So if you buy Euro USD at this price, and price is now at then you are minus -3 -4 pips. Does that make sense? If you don't understand this, please let me know what a pip is. If you don't understand, please let me know so I can go over it again. All the things we're going to cover from now are very important. So if you don't understand, let me know. I'll go through it again because it's very important. Okay, so let me go to the chart and then I'll show you properly. This is the Euro USD. Okay, now this line that you can see there is the current price. Is the current price of Euro USD. What I mean current price means that's where the Euro USD is trading now. Okay, so you can see the price here is at 1.19223. Usually you only have 4 decimal points. When you have a fifth one, yeah, it's got a different name. Okay, when it's got some platforms, some platforms allows you to change this and make them just 4 because the standard is 4. It's not 5, but some brokers or some platforms do give you the fifth one. So the fifth one is like having, it's just like your normal maths that we did. So you have a 0.1234. So the fifth one, is the 10th of that. So when this gets to 9, the next digit will be this changing to 5 and this starting from 0 again. And it's got a name. I think I will give that as a homework. Go and find out what the name is. I know what it is, but I won't tell you guys. Yeah, go and find out so you guys can get into do a bit of research for yourselves, right? So mostly you get 4 digits. Some brokers will give you 5, but when you get a broker that gives you 5, always neglect the last one and focus on the 4. Yeah, neglect the last one and focus on the 4, because this moves. When this moves, it doesn't really affect the currency, but when this moves, it does. This will move to 9, and you will not see anything happening to the currency pair. But if that moves to 9, you will see something happening to the currency pair. Alright, so go and find out the name for the last one. Just go and name. Yeah. So back to what I was showing. You said you didn't understand the minus bit. When the price is trading currently at 1.1922 and it changes from 1923 like it's doing, we will say that the price has moved 1 pip. Okay, if it goes down, I will say it's moved 1 pip. There's no difference. There is a difference when you trade. That's when the difference comes in. So when you buy, like we said the other day, last week, when you buy, let's say I have bought this pair right now at 1.1924. Okay, let's do this one. Where is PowerPoint? Oh, sorry. Okay, so I bought it at 1.1. I've bought it at 1.19244. Sorry, 24. Okay, now let's go and watch what the current price is now. It's still at 1.1924. Now let's keep in mind I've bought the pair. So when you buy, you expect it to go up. When you buy, you expect the price to go up. So where price it is now is gone down 1 pip, 1.1923. So let's put that here. Price has changed from there to 1.1923. If I want to tell you what's going on in terms of my trading, I've said I've bought the Euro USD and I am currently minus 1 pip. That's when you can say the minus. Yeah, that's when you can say the minus. And in forex we say you are in a loss of minus 1 pip or drawdown. Drawdown means you are in a, you've not lost the trade, is still going, but you are in a drawdown of -1 pip. If the opposite happens, like now, let's say price will move from 1.1924 to 1.1925. If price goes to 1.1925, then I will say that I am in a profit of 1 pip, or I am plus 1 pip. So it's profit or loss. So in a profit of 1 pip, or in a profit of, not profit, you are in minus. You are in a loss of -1 pip. Yeah, so that is the pip. And then obviously the plural is pips. So you have, if you make a trade and you go profit of 10 pips, then you are making some decent money. Usually you should make more than 50 pips when you trade. The way I trade, I make more than 50 pips. So put this terminology in your head, in your mind, or write it down. Pips. So they can say, okay, in your trading plan or your rules, you want to make 100 pips every week. Okay, so 100 pips every week means that you're going to buy or sell currency pairs and you're just gonna make pips. So you buy, let's say you buy the euro where it is now, and then it goes 1.22925. That has moved 1,000 pips. So it's 1, 2, 3, 4. So it's moved 1,000 pips. Does that make sense? If it moves to 3, then you can say it's moved 2,000 pips. Yeah. So that's how the pips. That's where this terminology comes in. Pips. Remember, don't forget the homework. Go and find out what the 5th digit is called. It's got a name. Let's move to the second one. Lots. This is a bit, it's not advanced, but all you have to know is that's the quantity of in shares, in stocks, we call it contracts or shares. How many shares are you buying? So you can say I'm buying 100 shares of XYZ company. Or in futures, we say how many contracts. So you're buying either 5 contracts or 10 contracts, or you're buying 100 shares or 200 shares of Apple stocks, or 300 shares of Amazon stock. Okay, in currencies we call it lots. So you are buying 10 lots of Euro USD, or you're buying 7 lots of Japanese yen USD, or you're buying 100 lots of British pound USD. So lots is the quantity of or the quantity trade size you are buying for a currency pair. Does that make sense? This one is easy. You go through that lots again when we are trading, because when you want to trade, you have to know the size that you have to trade based on your account size. So with account size of £1,000, you can trade, let's say, 2 lots. Okay, with the account size of about, let's say, 5 grand, you can trade 10 lots. So lots will depend, the number of lots you trade will depend on your account size, but we'll go through that more in details later. So remember pips and lots. So when we talk about these two next time, please, I don't want no one telling me they've not heard it before. So next one is trend. Now trend is a concept in forex or trading in general, which is basically the direction of price. So when price is going up, well, let me use down because this one is going down. So when price is going down, we will say we are in a downtrend. Okay, when price is going up, we say we are in an uptrend. So we have two types of, not two, we have three. So it's either is going up, or is going down, or is ranging. And what I mean by ranging means it's not going anywhere. It's in a range. So range means it goes up, comes down, goes up, comes down, goes up, comes down, within a range. So range is like a box. It can't break out from the box. Sorry, that's the ranging. So it's either price is going up, or it's coming down, or it's ranging. That's the trend. So we have an uptrend, a downtrend, or a range. I hope that makes sense. So that's trend. So it's either price is going up, which is an uptrend, or price is coming down, a downtrend, or price is going up and down, which is a range. So bid ask. This is a bit advanced, but I'm gonna say it in layman terms. So you guys, we go through that again. Let's see market watch. Can you all see this? Bid ask, bid ask. Okay, so when you want to buy something, someone has to sell it to you, and when you want to sell something, someone has to buy it from you. Sorry. When you want to buy something, someone has to sell it to you, and when you want to sell something, someone has to buy it from you. And this is where the bid and ask comes in. So when let me make this analogy. When you go to a show, they call it the auction. Have you guys heard about auction? So basically, they are selling something, right? And people are bidding for the price they want to pay. So let's say they are selling this car, a BMW. The asking price is £1,000. So the asking price is what the seller is willing to sell it. So he's asking for £1,000. Then you have the buyers bidding. So the buyers will be saying, "Oh, I want to buy it for 1,000," and then someone will say, "I want to buy it for 1,002," or someone will say, "I want to buy it for 1,003." So they are competing. Competing? Yeah, I think so. Yeah, they are competing for the price. Who gets the highest price wins. Okay, so they are bidding for the car, but the seller has already put a price, and that price is what? The asking price. That's the same thing when it comes to the forex market. Yeah. So when you want to buy, they will give you one price, and when you want to sell, they will give you a different price. And that's the bid and ask. So when you are buying, right, you are going to get the ask price. So they are selling it to you and you are buying. And then when you want to sell, you're going to get the bid price because you are selling and they are buying. It's a bit confusing, but eventually you get your head around it. Okay. I will say spend. I would say spend just 5 minutes on Google and search what is a bidding price and what is an asking price in forex. Get more understanding. It's not very it's not that important, simply because when you get to buying, you just don't look at the bidding price. The people that look at the bidding price and the asking price are those that trade in millions. Then it's very important to them because they want to get a specific price. But when it comes down to retail traders, the bidding and asking price is really not something we look deep into, simply because we use something called order limit. Order limit means that you place your order. So regardless of what the price is doing, you want to buy at a certain price. But if price doesn't get to that specific price that you want to buy, then you are not interested. So I have an example here on this pair. So price is currently trading here, and I have an order here. I want to buy at this specific price. Okay, if price doesn't get there, I'm not willing to buy. Yeah, so that is my order in the market. I'm waiting patiently. If price do get here, that's fine. If price doesn't, I've already bought one up here, so it doesn't matter. But I would prefer that price will come down and I'll buy more, and then price will go up. Yeah, so the bid and ask is important, but not very important, because when it comes to my buying, I don't care about what the bidding and the asking is saying. I just want to get this price, and that's it. So spend some time, do a little bit of research about bid and ask. Should give you enough information to know about them. It's not really important, but it will be important if you become a millionaire, because then you want to get the good price. So with some, I wouldn't say some, with most of these professional traders that trade the stock, the commodities market, they have what we call volume. So they can see how many people are buying at this price, or how many people are buying at that price, or how many people are buying at this price. So they want to get in at a specific pinpoint to the dot price, because they are dealing in millions, and it's not that easy when you trade in such huge money. So they want to be like on point, on dot. That's when it's very important to them. But with forex, mostly we don't look at that. You only look at it to know the difference between what your broker is charging you compared to someone else, to a different broker, which we'll be going through that if we have time. So the ask and the bid is simply what your broker is, or what you buy, the price you get, and when you sell, the price you get. Price chart. By now you guys have seen price chart. This is simply price chart. This green that you see now is your price chart. Yeah, so that one is very easy. Price is moving on this chart, so that's your price chart. Entry. So entry is when you're buying or selling a currency pair, the price that you buy it for is called your entry, or the price that you sell it for, that's your entry price. So entry is just what gets you into the market, either buying or selling. So if you buy at 1 is your entry. If you sell at 1 is your entry. Just simple. Your exit is the opposite of entry, what gets you out from the market. So if you bought at 1 and you exit at 2 is your exit. If you sell at 2 and you get out from 1 is your exit. That's simple. Stop loss. Now stop loss is the maximum of risk, or I would say maximum is the risk you are taking to take the trade. So if I want to buy, let's go back to the euro and the pound. So if I want to buy here and here, if I want to get out from the trade and I'm wrong, I want to get out somewhere here. So if price comes down and hits this line, then I know I'm totally wrong about my trade. So I exit. I put a stop loss. So the stop loss is actually taking you out from the market, because I wouldn't say you've made a mistake. You are wrong on your analysis. You're wrong on your prediction. So then the stop loss takes you out from the market. It's very important, simply because if you don't put a stop loss and price comes down and it keeps going down, then obviously you are on the wrong side of the market. You'll be losing money. So stop loss protects you from losing all your money on your account. So when you're wrong, you want to get out from the market with a stop loss as soon as possible. So if price, I'm looking at price right now, if price is to get down and keep down and hit this line that I've drew, then I know I'm wrong. So I'll take a loss. But if I'm right and it goes up, Then I'll take this. The opposite of stop loss is profit. I didn't put that one there. Yeah, it's here. Profit. And that one is called target. So you put a stop loss and a target. So on this one, my stop loss is here, my target is there. So I'm targeting for price to move from where it is now all the way up here. When it gets up there, I take my money and I put it in the bank. I mean, put it in my account. But if it goes the opposite way, then they take my money and then they put it in their bank account. Simple as that. Yeah. So that's your stop loss, and that's your profit and loss. Now the return. Return in trading simply means how much you are um you are getting on top of your account size, or on top of your investment. So if you have an account of £1,000, you can say you want to make 10% every month of 1,000, or 20% every month of 1,000. That's entirely up to you to decide, but we will go through that, because there's a reason why um you have to choose a certain amount of return for your account, simply for you not to lose your account, or for you not to do something stupid. So you will learn what kind of return is good when you start investing real money. So if I want to invest or put £10,000 in my trading account, I can say I can risk 1%, and then the return every month I want to make 10% return. So if I have a £10,000 account, every month I expect to make 10% of 10,000, which is I think 1,000. I hope so far no one has a question, because no one is saying anything. So I would say yes, everybody understands what I'm saying. So I'll just continue. But again, pips, lots, trends, bid, ask, price chart, entry, exit, stop loss. Right now, everybody should. Next week, I'll ask just randomly what a trend is, or what a stop loss is, and then see if you guys did follow what I was saying. Um, I'm gonna go through this one, and then we'll be done for today, because I promised we finish at 9:30. We've gone past 9:30, so within the next 9 minutes, we're gonna use it to cover this, and then we'll go through the psychology next time. So brokers. When I say broker, um, we are. I have a young audience, so when I say broker, most of you wouldn't understand. But if it was an old generation people that I was talking to, when I say broker, they will understand what I mean by broker, simply because back in the days it was a common word. Like if you want to trade, you go through a broker, you phone them up. I will recommend a movie for you guys to watch, and I'll find the title next week for you guys to watch. It's a guy who opened a brokerage company. Basically, they just take people's their clients' orders and place, because back in the days there were no even though there were computers, not everybody had them, and there was no internet connection that we do have now. So if you wanted to trade, you have to phone up your broker. So your broker is simply the bridge that connects you to the financial market. Yeah. So if you want to trade the forex market, you need to go through a broker. Now the broker is simply the man or the machine that connects you to the financial market. So they give you access to the financial market. And back in the days, they were very bad, trust me. They will take your trade, they will take your orders, and then sometimes they wouldn't even execute your trade. Or if you say to buy at 1111, they will go and buy at 1115. And if you lose money, they don't care, simply because you asked them to do it. But now things have changed. We have the internet, we have computers. You can do your trading at home, or you can just connect to one of the brokers, not through a phone, but through a platform. So, like you can see, guys, this platform that I'm using, this platform that I'm using was given to me by this company called ICM Market. ICM Market is a broker. We have several of them. We have loads of them, but they are divided into two categories. So on my slide, I put them there. There are two different types of brokers. We have the brokers called dealing desk, and we have the ones called no dealing desk. So you have a DD or an NDD. The difference is huge. The DD brokers are also called market makers. What I mean by market maker is they create the market. So let's say we have company X. Company X. That's the broker's name, yeah. And company X has 10,000 clients, which means he has 10,000 people trading through them. Okay. If that company X is a DD, which means dealing desk broker, when you place your trade, they will match your trade with their client's database. So let's say you want to buy euro where the price is right now. When you buy, they go into their system and then find someone who is willing to sell to you. Okay, so the dealing desk or market maker, they make the market simply because when you place your trade, they will find someone inside their own system and pair your trade with them. So like I said, when you buy, someone has to sell it to you. So when you buy from a dealing desk broker, or when you use them as your broker, they will match your trades with another person on their same database. It's very important you understand this, on their same database. So let's say in their database, someone is selling euro at 1.1924, yeah, and you want to buy at 1924, yeah. 1.19219 1924. So you have two people. One is willing to buy at 1924. One is willing to sell at 1924, and they will just merge you two. So then you will be giving the buy ticket. Someone else will be giving the sell ticket. So wherever price moves, one will lose money, one will make money. Does that make sense? So that is the DD. That's the dealer's desk. Avoid them as much as you can, because most of the time, if there is no one in their system and they can't pay your trade, then they have to take the other side of your trade. So if you are buying at 1.1924, they have to sell to you at 1.1924. So they take the other side of your trade, and then obviously they don't want you to make money. So they will move price against you. Yeah, they will move price against you, and then you end up losing your money. So most of the time, we don't deal with market makers or dealers desk, and they are becoming obsolete because they manipulate the pairs or the currency that you get into, to the point that some people get so frustrated they report them. So don't use a dealer's desk. You, when it comes to choosing a broker, we go through what to look for. And obviously the no dealing desk is the opposite of the DD. So the NDD simply has a large um, liquidity of clients. So when you buy at a certain price, they will send your trade to major banks, small banks, institutions, and then they will find a price for you. They don't take the other side of your trade. They don't, it has nothing to do with your trade. They only get you into the market. So their job is to just get you into the market basically. So they take your order, they pass it through, and it's all done within a speed of a second, so you wouldn't see it. But most of the time, that's what they do. They will take your trade and pass it to, we call it liquidity providers. They'll pass your trade to them, get the trade done, executed before you can see it on the platform. So the no dealer desk is the ones that we will be using. So the company that I use as a broker is called IC Market. Yeah, IC Market. Look up here, IC Market. That's the broker I use. And there's tens and thousands of them. Okay, but if you are going to choose one, make sure that your broker is an NDD. Don't go for a DD broker. Go for an NDD, because they will pass your trades to a liquidity provider before getting your trade. If you go for a DD, then the DD broker will take the other side of your trade and sometimes trade against you. Not all the time, but most of the time they will trade against you. Okay, so that's for the broker. There's a lots of them. Some are being banned constantly because they don't follow rules. Some are being taken to court because they manipulate the market so well that people lose money. So that's why when it comes to selecting a broker, it is very, very important to read their terms and conditions. Make sure that they are regulated. What I mean by regulated is, when you put your money in the bank, they have this regulation, the Financial Conduct Authority protecting your money. So every bank is regulated by that institution. So if anything happens to your money, Financial Conduct Authority is where you should run to, and they will have issues with the bank. Similar, if you want to go through no pain, no hassle, then do your homework, check the broker out, make sure that they are being regulated. Some brokers are not regulated, some are regulated by the wrong institutions, and some are well regulated. The one I trade with is well regulated. That's why I trade with them. And some of the regulation bodies we're gonna go through when we come to actually selecting a broker to trade with. Yeah, so that is all for the brokers. We'll go through them again because time is far gone, and this is the information you need for now. Next week we're gonna start um, going through the chart. So I recommend very well that you all start preparing your computers ready. So when I log on, I'll show you what to do, how to do it, and then you just copy, because you're gonna start to download the platforms. We're gonna choose a broker, and then we're gonna start doing stuff. But before we do all that, we have to make sure the first 3 lessons that we've done, we've understood them before we can do that. So if you don't understand anything, prepare your questions. Next week Tuesday, we not meet on Monday, we meet on Tuesday. We're gonna go through all your questions if you do have any. If you don't, then we just carry on. But do your homework before coming. So with that, I would say if you have any question, ask me now or forever hold your peace. If you have any question, please ask me now or forever hold your peace. For the last time, if you have any question, ask me now or forever hold your peace. Good. I am a very good teacher because no one asked a question. So I presume everybody has understood everything that I explained, which is very good. So I will end here, and I will see you guys next week. Don't forget your homework. Go and find out what this last number is called. and then spend time finding out what bid and ask is for. And then I'll see you guys next week. Take care and enjoy the rest of your week.